Welcome to Ben Talks Money. Here we discuss stocks, investments, ETFs, and personal finance.
Every time the stock market drops, people ask the question, where did all the money go? You hear in the news, 50 billion was wiped out of the market today. And the question is, where did that 50 billion go? Is it hiding somewhere? Did somebody take it? Is it waiting to come back later time when the market goes up? What is really going on? Where is the money? Where does the money go when the stock market drops? Hi, welcome back to Ben Talks Money. My name is Ben. I have an MBA in Finance and Management. I've been trading for 8 years and I'm a full-time options trader. This is a question that a lot of people ask every time the market drops. Where is the money? Where did the money go? Let's break it down. The stock market isn't a pile of cash sitting somewhere. When you hear Apple is worth 5 trillion or NVIDIA is worth 5 trillion, it doesn't mean that NVIDIA has $5 trillion sitting on their account. It's just a valuation on the company based on the stock price. And the stock price is simply what buyers and sellers are willing to trade. Let's look at the stock market as an eBay for stocks. Prices go up, prices come down. And the price at any particular time is simply what buyers are willing to pay and sellers are willing to sell. And that depends on the supply and demand. The supply and demand determines how much a stock is going to trade for. Let's say you all want to buy Apple stock right now, and the price goes up because the demand is higher than the supply. And all of a sudden, we all want to sell. What do you think is going to happen? Are we going to sell it at a higher price or a lower price? And the answer is that we are going to sell it at a lower price. Why? Because at that time, there is more supply, that is the people willing to sell, than the demand, the people willing to buy. And in economics, whenever there is more supply than demand, prices drop. So that is why you see stock dropping. It comes from the fact that maybe there is a news in the market that the economy is bad, or there is a trade story that shakes investors, and all of a sudden you have more people willing to sell the stock than people willing to buy. So what happens is that the value will drop, and it's not physical cash. It's just a value. It's just the valuation on the stock. So let's take it like this. Let's say you bought a painting on eBay for $1,000. You bought $1,000 painting on eBay last month, and today you want to sell the painting. You put it on eBay and you ask for people to bid, and you're not getting $1,000. You are getting $700. The highest bid on your painting is $700. Meanwhile, you bought a painting for $1,000. Does it mean $300 just vanished from the painting? No, it's the same painting that you bought. What happened is that the value has decreased. You haven't given any money to anybody. Nobody has stolen money from you. The value of the painting has dropped. Why? Because the next person is not willing to pay as much as you did. So the $1,000 that you paid, even though $1,000 came out of your pocket, but the value is the intrinsic value of the painting that you determined to pay $1,000 for. NVIDIA stock right now is trading around $190. Last week, it was around $212. So you got into the market, you heard there's a lot of news on NVIDIA, everybody is buying, the stock is going up. So you paid $212 for NVIDIA. And the following day, there's bad news, NVIDIA is down $10. What happened? Did somebody steal the money? No. If you bought one share, you still have the one share that you bought from NVIDIA in your portfolio. But the value has decreased because the market has changed. The environment has changed. And because of the change in environment, the value of the stock has changed. So if you want to sell it, then you are going to have to sell it less because the buyers are not willing to pay the amount of money that you paid for. But on the other hand, nobody has taken money. Nobody is hiding the money from you. It's just a trade, buying and selling. Let's say you put your old iPhone on Facebook Marketplace. You bought the phone for $1,200. Let's say iPhone 17. You bought iPhone 17 for $1,200. And after 1 week, you realize you don't want it. So you put it on Facebook Marketplace and you want to sell it. The next person comes in and says, I'm going to pay you $1,000 for the iPhone 17 that you are selling. And you are like, no, I paid $1,200 for it. But the person is willing to pay $1,000 because that is the value that the person puts on the iPhone. It's the same in the stock market. It's determined by the market makers. The buyers and the sellers, every day they come to the market. When the market opens at 9:30 Eastern, sellers and buyers come into the market and they will determine how much we are going to pay for every asset on the market. And that value is determined by a lot of factors. There might be earnings, there might be macroeconomic activity, There might be some new development coming in with the company. There might be some bad news. It depends on a lot of things. And every day, every company is evaluated and valued on the market. That's why the market is open every single day from 9:30 Eastern to 4 p.m. Traders gather to determine how much we are going to pay for every stock or every asset on the stock exchange. So when the market drops, the money doesn't go anywhere. The money doesn't vanish. It is all perception. The whole market is perception. That's why they say you haven't lost anything until you sell it. And until you sell it, that's when you realize the amount that you have gained or you have lost. That's why when you are trading, we have realized profit or loss and unrealized profit or loss. Until you sell it, it is still an intrinsic value that can vanish within a second based on how the market is being evaluated at that particular point in time. Yeah, so that's it for the video today. If it was helpful to you, please like, share. And if you're new here, please subscribe to the channel. I'm getting close to 4,000 subscribers, and your subscription will go a long way in helping me achieve that. And until next time, let's keep talking money.